But let's focus on the cement companies. They've reportedly taken price increases for the month of September, and with strong demand and falling input costs, things are probably looking up from here. Mangesh Bhadang, the Senior VP Research at Centrum Broking, joins us on the show. Hi Mangesh, thanks so much for joining in. Well, what are you making of these cement companies? It's monsoon, normally a grim period, but this time around, it's been a good monsoon. Demand is higher, pricing is moving up as well. So give us a couple of details. With this sort of a mix, are you penciling in some EBITDA per ton improvement in Q2, even comparison to Q1, or do you expect a flattish number?
Good morning, Nigel. Yeah, it was quite unusual, the September hike. So we have seen cement companies increasing prices by 5 to 10 rupees across the region, and the price hike is actually being higher in the eastern region. We are not too sure whether this will be absorbed by the market, but at least the initial indication is that the companies do want to press ahead with the price hikes in the month of September. The reason why I said it is unusual is because generally September being a monsoon month and there are festivals around, you don't generally see a price hike in this time at this time of the year. So having said that, what companies are trying to do basically is that there has been a recent increase in operating costs for the sector as the imported petcoke prices have started moving up. And plus, in probably these are one of the last 2 quarters before the election code of conduct starts hitting in the 4Q. So they would try and maximize the EBITDA as much as possible before getting into that period. So what I feel is that anyway, second quarter, the EBITDA per ton was going to expand on lower P&F costs, and this should actually aid it further, the better realization.
How much will it go in? If you could give us a ballpark number for the second half of the year, how much can the EBITDA per ton improve for the cement companies, for the industry? And there are a couple of them that will see outsized increase, if you want to highlight that.
Yeah, so what we are penciling in right now is that from the exit of 1Q FY24, there would be around 150 to 200 rupees increase in EBITDA per ton, and which is largely because of the reduction in power and fuel costs. Currently, we are not factoring in any substantial realization growth for the sector. So if this does sustain and we do get YY increase in growth, I think this is something that could surprise us positively. But in terms of surprises, I think northern region has been doing really well in terms of pricing as well as demand. So I think the positive surprises in the next quarter probably should come from that segment.
Sure. No, Mangesh, hi, good morning. This is Sonia here. One of your top picks in the sector is UltraTech Cement, and if you go through the chart, you'll notice that there's almost a 20% rally that stock has seen in the last 6 months. At this price of almost 8,600, is the risk reward still favorable? And if yes, what are the target prices you're looking at? What kind of earnings growth are you penciling in?
So, see, our view on the company is that this is a market leader, and despite undergoing one of the largest capex in the history of the company, this company will be debt-free in the next year. So even though the valuations currently are not favorable, but we do believe that we would start seeing at least the accumulation should happen at this level, because if you compare it with some of the other peers, we do see that there is some more steam left in the counter. And I think that is one stock which is an index stock which I believe one should be equal weight or overweight on just to play the sector.
You also have a buy on BirlaCorp with a target price of 15.25. What's the upside that you're looking at in terms of earnings over there? And given that, this demand is good right now, but post-election, there's an expectation that perhaps there could be a slump. So heading into that, how are you penciling in the growth for many of these companies?
See, for BirlaCorp, the view is that the stock has been undervalued, and we are going to see improvement in the profitability as well as deleveraging from the company. The improvement should come as the new plant of the company at Kukurban ramps up, and the deleveraging should happen because now the focus is on balance sheet hygiene. So that is the combination which we believe that makes BirlaCorp a re-rating candidate, and that's why we have a buy on. And you're right, we do see that, the FY24 could probably be the third year wherein cement demand growth has been consistently been higher. And in the last 3 years, if this year turns out to be 8 to 9% or 9 to 10% growth, we would see a CAGR of much higher of 9 to 10% in the last 3 years compared to what we have seen in the past. So following it up in a post-election year in FY25 is going to be difficult, and that's why we are expecting FY25 to be flattish or with 2 to 3% growth only. The companies do understand that, and our belief currently is that probably we could see some increase in supply as well as competitive pressure once all those capacities start hitting it and there is no incremental demand in 25. But current undertone is that the demand remains positive. We'll have to wait and see how it turns out.
All right, Mangesh, final question before we let you go. You're still not impressed with Shree Cement. North Indian companies, as you mentioned, pricing was good, demand is fairly good as well. But Shree, you still have a sell rating? It's because of valuations itself?
Yes, unfortunately, it's one of the best companies in the sector. So the valuations is the only factor not positive on the stock.
Okay, Mangesh, we'll let you go on that note. Thanks a lot for joining in. Appreciate your thoughts. That's Mangesh Bhadang of Centrum talking about the cement sector.